what is hazard insurance for a single family home, and what is HO6 and master insurance for a condo. Mike Nielsen here, guaranteed rate. So hazard insurance is the insurance policy that you'll get before closing or right at closing when you're getting your new home. Essentially, it's exactly how it says, right? Hazard insurance. So it's a homeowner's insurance policy, and it's for hazards that can occur. And essentially what you're getting is you're getting enough coverage so that if certain damages occur in your area, and insurance changes all over the place depending on what's probable in certain areas to happen, and insurance costs change based on that as well, right? So what you want to look at though is you want to see if you're getting enough coverage for your mortgage lender. Your mortgage lender can work directly with you to let you know if you're getting enough coverage. Really what they're looking for is based on the replacement cost estimator, which is the cost it would take for you to rebuild your entire house from the ground up. They're trying to figure out if you have enough premium to go ahead and do that. So that's usually the biggest swing in costs from the standpoint of a insurance premium, is how much is going to cost to rebuild your house. Hence, a bigger home comes with more insurance costs. Now, HO6 policy, when you're getting an HO6, and the reason why you're getting an HO6 if you're buying a condo is you're probably going to see something in the description of the listing called master insurance. Master insurance is the insurance that the condominium complex or management company holds in place. Sometimes there's enough coverage in just master insurance that you don't need an HO6 policy. What I mean by that is the master insurance is big enough, right, if that's the right way to describe it, or there's enough coverage there so that if the building gets destroyed, the building will get completely replaced, your unit included, right? If there's not enough coverage there, if it's essentially only covering most of the structure, shell, common areas, and it's not really covering your unit, fixtures, finishes, things of that nature, right? Like if it only rebuild the building, but it's really not going to rebuild all of the units, there's just not enough coverage there in the master insurance, you then have to get HO6 coverage. HO6 coverage is sometimes also called like condo supplement coverage, right? Because we're filling in the gaps of what's not covered in master insurance, right? So take a look at your master insurance policy, ask the listing agent up front when you're making the offer. If it's all in coverage means you don't technically need your own coverage depending on if it's worded correctly in the recorded laws, bylaws of the association. But that's the long and short of it, is hazard insurance for the house. You're gonna, and here's the mechanics of it. You're gonna get a quote during your process of buying a home. You're gonna send that to your lender. Your lender can then work with that agent to make sure that we're either paying for the binder at closing or before closing. Typically, we want to see it paid before closing, and we'll just get a paid in full binder. So essentially, the insurance agent will reach out to us and say, here you go, Mr. and Mrs. Lender. Here's the paid in full binder. They've already paid us. They're good to go. You just got to let us know if there's escrow or not. Now, HO6 functions about the same way. You get a quote, send it over, we make sure there's enough coverage, you pay for it up front. It's going to be part of your closing costs and all of your quotes up front, your loan estimate, everything there. We're going to be quoting you what HO6 and what hazard insurance might cost for about the purchase price of your house is how we're backing into it. We're assuming some numbers there based on that information and based on the locale of where you're buying your house. But you're really going to get an exact number once you actually start shopping around, and then you just work with your lender to finalize everything.